Hello everyone, how's it going? In this video, we will talk about GTII, its trading potentials, if the stock deserves to have a place in your portfolio, and why there could be a massive gain that's possible from not just the ongoing short squeeze, but the company itself. Before I begin today's topic, if you appreciate my content and would like to support my channel, please give my videos a like, comment, and subscribe to my channel. Also, please consider to take a look at the affiliate links down in the description. For the Amazon link, you can simply save it as your bookmark so that every time you purchase anything from it, a commission can be paid to me without additional costs for you. Thanks for your support, it means a lot to me. And with all that being said, let's start today's video. Over the course of the past few days, we saw GTII stock price going up to almost $2. With a relatively stable ascension that's very smooth. The stock price has been maintained mostly thanks to the market's optimism and the assumption that for the small cap company, there is only one way to go, which is up. The $2 level is going to be a very significant resistance level to look at because right now, as we're approaching it, we have to be aware that this is a key resistance region. If the stock can go beyond the $2 level and remain above $2, then this is going to not only provide a new baseline for the stock, but also a very important step forward because it's going to basically free up people's the mentality that people have regarding how high the stock can go. Of course, previously it went up to like $15, $20, but it didn't last. So if it can go beyond $2, then I think that, the $4 level would be within reach. Regarding the potential retracement, the downward supports are choppy, and the 15 cents level is currently the only fairly solid support that I can see. Obviously, with all that choppiness, for the stock to reach, 50 cents is going to take quite a journey, but not impossible. So this is why we should assume that the real support region could be as low as 50 cents before we can hope for a rebound. The focus on GTII would be to speculate on the short-term swings and the short squeeze gains. And I believe that the main attractions of the stock lie indeed in the short term. Is it possible that GTII will become a very valuable company discovering new talents? Possibly. But if our goal here is to make money in the stock market, then I think that the short-term relevance is higher than the long-term relevance here. Global Tech Industry Group, trading under the ticker symbol GTII on the OTC market, is a company based in Nevada focusing on acquiring growth and startup companies to build a portfolio of holdings in promising companies that'll shape and make tomorrow's economy. Simply put, it is an acquirer whose value depends entirely on the quality of expertise, assets, research, and people that they can manage to buy within the sectors that they choose. The reason why this kind of structure can be attractive is because the narrative can be very flexible, which can be adapted to whatever is trending in the market at the moment. Now, of course, if consistency and continuity are non-negotiable values that you hold dear to, this may not be the best stock for you, but for market participants who simply want to make a quick buck by buying low and selling high, this is actually a pretty smart position to adopt. In a way, GTII reminds me of another company that we have covered before on the channel called Ideanomics, trading under the ticker symbol IDEX. It may not have the same kind of purchasing profile, but ultimately their value on the proposal relies on a company's capacity to retain valuable assets with high potentials to be popular and trending topics in the months and years to come. It is like putting your money in a publicly traded VC fund or early-stage business incubators, because the investment can be done at a very early stage. the equity can be very inexpensive to acquire, to be later sold during a different economic phase. That is essentially the reason why companies like GTII have always interested the market. It's not always because we believe wholeheartedly that those kinds of companies are going to be succeeding. It's just because the narrative can adapt. With that being said, those kinds of companies obviously come with their own risks, as the lack of trust in the market, or put it more simply, the lack of demand for risks, can really hurt its stock price. If the market remains bearish, then many titles might be losing value, and it's going to be a matter of time before the capital becomes more risk-averse than ever, and would collectively prefer to go into safer assets, guaranteeing a yield. This kind of situation isn't only bad for fundamental perspectives, but also from a financial perspective. It can force companies to get funds either with higher interest rates or from companies that have a shadier origin or shadier business model. This is precisely what happened with GTII. So some time ago, it entered into an agreement with a company with a pretty steep track record in doing this kind of thing to companies they lend money to. They know that those companies are in difficulties, they short sell their shares, and they make profits both ways. Interest on one hand, profits by short selling on the other. And in the end, because the market tends to be a self-fulfilling prophecy, whatever they think will happen will end up happening, if the position size is big enough. So a stock can be borrowed from brokers, sold in the market, and be bought back later, hopefully at a lower price than when it was first sold, to make a quick buck. Unlike the typical long positions though, a short position will generate financial fees that need to be paid periodically to keep the position open, which would further motivate the short sellers to buy back the positions if they spot a move against their position, regardless of whether it can be justified. This is another major attraction of GTII. It has an important short position stacked against it, which is another way to say that there is a high potential for short squeeze to occur, which may force many short positions to be redeemed so that the short sellers don't suffer massive losses. We have to remember that if a long position has a potential loss that's between the entry price and zero, the potential loss for short position is theoretically much larger, between the entry price and infinite high, in addition to the financial costs payable to brokers if the position doesn't close. With that being said, GTII obviously offers a lot of potentials and opportunities in the upward volatilities. But we gotta remember that we have to stay vigilant about the market mood, both in its own right and towards GTII in particular. We also have to remember So at the moment, I would recommend to keep buying GTII and to expect some sort of spike towards higher prices, regardless of if it can result in something more sustainable. Now, if you actually see those spikes, the most important thing to remember would be to prepare for rapid exits. The profit target should be at least 50% of the cost basis to compensate against the risk that is involved. Right? So, personally, I think that GTII is going to go higher, but how high is everyone's guess. Your guess is as good as mine. I'm just saying that the momentum right now highly suggests that there will be enough steam to keep climbing a few levels still. So this is why I recommend to buy it now. But you have to be prepared that the retracement can go as low as 50 cents. And for that, yes, this would be a risky position. And the maximum exposure should not be higher than 1% of your portfolio's capital.